Hello, this is Vance, and this is Wednesday, April the 26th, 2017. These are the CL trades for today using the slow hand method for price action. I've got a regular trading hours chart up here. It's a 1600 tick chart just so I could get it in on one page. But I wanted to show something. Now, notice this big gap here from the overnight. This is the overnight, and this is the gap down for when price opened at 9 o'clock. And from this, what you can see is this gap was at the close 230, and there's this huge, a fall off in price. And the fall off in price occurred at about, let's call it 49.60 when price opened at 49.12. Let's call it 48 ticks. That 48 ticks really represented the API report that came out that was a little bit more bearish than expected. Now, when the American Petroleum Institute comes out with a report, in this fact it was a bearish, and despite the fact that price oil had been up yesterday, when that report came out, price had kind of sold off. And likewise, it kind of made some recovery in the overnight and then sold off again. So this is at 9 o'clock, the 9 o'clock open. And keep in mind, today is the DOE report. It comes out at 10:30. And so one thing that I was looking for and what you consider is that whether or not the API report is going to be supported or it's going to be unexpected. And that can give you a hint. So in other words, the API report yesterday was a bearish report, and that's why we had that fall off at 4:30 when the report came out as far as pricing after the market had closed. Likewise, today, if we have a bearish report on the DOE that supports the API report, or even more so, we're going to have a fall off in price. If, on the other hand, that report is somewhat bullish in nature, then we'll probably have a gap fill. It'll fill up this overnight gap. And the reason I suggest that is because that's really what happened today. Now, I'm just showing this to point this out. Now, let me go back to the 800 tick chart. And I don't use this for trading. I just want to use this as an example just to show you this. Now, let's take a look at, let's see. Okay, this is today. This is where the 9 o'clock, where price had opened, it kind of drove down. Now you can see this 800 tick chart. There's more bars in here now. As you can see, this was the price had fallen off because of the API report, comes back down. And I was talking this morning on the pre-market bite about this area of about 49, like $49 as being support, because it was really support yesterday. I expected that to be the same today, unless, of course, the DOE report was significantly more bearish than we expected. After prices opened, we had this, price really turned into this pretty tight trading range, which is an indication that, now again, this is the day of the DOE report, so you don't know, this tight trading range is 15 ticks. I was able to take a couple of these trades, kind of, only got the first contract in a couple of them, but if you held into this, now this is one of the rare instances where you could have held into the report. And I mean, it's a kind of a controversial topic, but the point that I'm trying to make is that if your stop is low enough, and if you're break even when the report comes out, it can certainly push you in the other direction. You can get your stop hit very, very quickly. So it depends where your entry was. But in this circumstance, look where that report, it was really kind of an all or nothing kind of play. If it's a bullish report, then it's going to go up. It's going to go up higher. If it's a bearish report, well, then you're going to take it out. Now, the only reason I would be long on this is because, number one, I'm below the areas. I'm very close to the areas as far as the lows from yesterday. And frankly, the report, again, if the report's a bearish report, then you're going to get taken out anyway. If it's a bullish report, then you have that opportunity of prices filling in this gap that occurred the overnight and maybe going higher. And that's exactly what happened. It was the price with the oil drawdown was larger than expected, and as a result, price really kind of ratcheted its way up there very quickly. In fact, it really hit the high of what it was a couple days ago. So I mean, we're looking back at this is on Monday. The Monday's price was 50.20, and I talked about that. And so price really got up to there. It did subsequently pull back after the fact, and that was something that kind of worked its way down. And this is like right now, of course. But price came back and retested this 49.18 level. You don't know what accounts for that, but the point is that was out of the trades anyways. A couple of shorts here. You could have gotten short here, but again, this was pretty much the biggest move. You know, had you been in here, what else more do you need? For the rest of the day, there really wasn't too much. You know, 11.29. The idea was that I think that after the report, I think we really established a range, like a spike in channel right around here. And I think this was the top. I think this is the bottom, maybe even a little bit lower. So, but it's a pretty tight range. I mean, we're talking 15 ticks here. So if you were looking at trying to get in, a lot of these might have been just break-even trades, but it's particularly here. This is pretty much the only place where you could either go short or go long near these bottoms. And even here, you know, price is really stacking up, because by the time 11:30, this whole area right here from 11:30 to 2:30, you know, we're stuck in this 15 tick range. And if you have a large move one way or the other, it just really shows me when you have a tight trading range like this, after a large move like this spike and channel idea, really the market doesn't know which way to go. And then really right after the close, we had this breakdown to this area. So, you know, there was some more sellers selling pressure after the close than before. And when the bull stepped away from the market after the close, you know, prices has ratcheted lower. Now, don't know what's going to transpire tomorrow. I mean, we never do know. But again, we're hovering around that 49.18 level, you know, down to $49. See what the overnight holds on, and maybe this will hold. One last thing, and if you look at the, let me just show you the market profile thing that I've got here. I show this once in a while. This is from the last 3 days. Oh, let me get this bigger. You can see from the last 3 days, this is including today, Wednesday, but this is Friday, Monday, Tuesday, Wednesday, and if you look at where that level is, and I was talking about that this level right here. You know, pricing is like just at $49, just $49. Oops, let me get rid of that. Okay, $49 right here, right across here. You see that? This is. Sorry for the crooked line, but the $49 level, anytime price revisited down here, this was the place to get in. Here, it didn't really stay down here, look, and then as you can see, when price spiked up here, it really this is really the new high. So I don't know if we're looking at 40, if price rotates back up in this area, and this is after the close. So now the current price is where? Price came down here, and now we're really at 49 again. So we'll see what happens in the overnight. Can we roll in some of this area right here and then go from there? But we'll just have to wait and see. So that's it for today. Tomorrow's last day. I'll be reporting. It'll be Thursday. Thanks for watching. If you have any questions, please let me know. This is Vance. Bye for now.